The broadcast is now starting. All attendees are in listen-only mode.
Well, this song has been with me on the whole journey, really, since I moved to the States 4 years ago. And this song is all about taking chances and following your dreams. It's called Best Year. This could be the best year of our lives. We tear up the rule book, leave it all behind. Work all day till you close your eyes. Let's get out of this town, find some bluer skies. And I feel the good times coming. I see a new sun rising. The waves on the horizon. This could be the best year of my life.
All right. Good morning. How's everybody doing today? That music there was Callahan, actually an artist from the UK that lives in the US now. And just dropped everything, came to the US and followed her dreams. So look her up on YouTube, Callahan. She's got some great music. Good to see everybody here today. We're going to go over some of the power of the 62, answer any questions you have regarding it. And as these sessions move forward, there'll be more and more support. It's kind of how Steve designed it and is working with us on it. So as you use it, post in the groups with it. You're free to tag me on the Power 62 stuff. I'll answer your questions there. Bring your questions to the group. But the more you post, the more everybody learns. So we need to remember that. We need to use that resource in the Scans, Forks, and Fibos group. All right, let's get rolling here. We'll go right into the disclaimer because it's so fun to read. Oops. All right, trading foreign currency on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its contents, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional, and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, and acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results may have inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown, In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. So there we go. Take a screenshot if you haven't seen it. Looks like everybody on here today has been to one of the previous sessions. And here is the schedule for the week. Wednesdays are a little lighter. We've got Clay Taylor doing intermediate and advanced waveology at this evening at 1900. That's Eastern Standard Time. And then Thursdays are a full slate again. So yesterday we had Josh Casey do his first beginner's waveology. If you didn't catch that, the replays are up. So take the time to hit that. And actually, you know what? Yeah, it's Wednesday. So hit that replay with Josh Casey. Did a great job on waveology there and the understanding on it. If you're using Fast 33 or Tab 29, it really is, the understanding of that is paramount to your success long term. And it's not hard, it's an RAS thing. Once you do get it, it's blatantly obvious. Until you do, it can be a little bit frustrating, but you can get it. Everybody can get it with persistence. In the chat box, let me know if you're using Tab 29 or Fast 33, please. $33, $29, $33. Martin, you got a little insight to waveology this morning already from me, so. All right. So a little mix of Tab 29 and Fast 33. I'm going to cover this one slide today, and this information you can see at the top was covered in the May 3rd Disruptive Traders TV when Steve released the all time frames harmonic targets. Are you guys using that indicator on your charts? I see it on a lot of the posts, a lot of the posts in the group, but definitely a great indicator. He went into about an hour of background explaining why it is, what it does. So that's a great resource, straight from the Grizzly himself. Again, May 3rd, Disruptive Traders TV. If you go with Scans, Forks, and Fibos and search for, you can search for HTATF, it'll come up. And it's also in the archive, I believe. All right, so we're getting some people using it. Some more for the 513.62. The harmonic targets, there's different ways to use them. There is potential support and resistance, of course. On the 30-minute, you'll see some pretty neat things with them if you're using them long-term on the 30-minute. And here, this is a 30-minute chart. Let me grab my pencil here. All right, so we can see we're a 30-minute chart. Whoops, we'll underline it here. USD JPY. It's wiki. I use this more as an example of how price was moving. I mean, look at right in here, not something we want to be trading at that point. This is from earlier this week. We've got in the States, the Fed rates come out today. And so it's kind of been playing with the market a little bit this week. But if we look here, price was kind of jogging up. Spencer, I'll answer your question in a second here. The price was jogging up, makes a high here. And if we look, the 30-minute has cycled the 240 up. The waves are a little blocky here because this is a reload. So here, essentially that 240 is up higher, especially with the wick, 30-minute wick. So we got a harmonic wave convergence right here, HWC. And then we see our 4-hour wave starts to move down, and the 30 cycling it down. So that's the waveology that's going on. Now, also on my chart, you can see I have my shredder band 21 set up. Obviously, there's other values in the shredder band, but for this example, I wanted to show this. It's coincidental that price, made a turnaround kind of on the 21, but it'll come into play down here. So we come out of our harmonic wave convergence. The 30-minute 5 crosses the 30-minute 13, and then the 13 makes a cross right here on the 62. At that point, I have the harmonic targets turned on, so they're going to flip red. Yes, it is here. We can see it. And we can see our price is moving down. Obviously, it needs to move the EMAs down. Now, what's neat is a lot of times you're going to see, when you see the cross here, you're going to see a pass and a check. This is a strong trade right here, or a strong move. Comes back, checks the 62 on a lower time frame. You're going to have a clayway there. You're probably going to have a 10-minute convergence right there. So we're looking for that regardless of time frame. Again, I talked last week about the length of the wave. Here we're looking at a 30-minute chart. From here, once we get this cross, and this is covered in this video right here, once we get this cross, price likes to pull down to the shredder band 21. And a lot of times you won't get this initial check. It'll go down, just keep rolling down, and then it'll come back and check. And at that point, a lot of times the HT, the harmonic target, and the shredder band will be the same. But price likes to come down here and then go back and check the 30-minute 62, which is on time period, right? And then rifle out. Here it came out a little bit slower. We can see we're in the middle of the afternoon, in London session. But you'll see this over and over and over again. And it's one of the reasons, to me, probably one of the main reasons to keep your 30-minute, if you're trading a 5, 10, 15-minute wave, to keep your 30-minute chart alive and know what's going on in the 30-minute. You can look at here we can see the 4 hours cycling down. We want to know what that 4 hour is doing as well. And again, these are covered in a lot of the waveology courses or waveology support sessions. But we'll see that where it comes down to the 21. And the thing is when you have to be careful about your mind being predictive and predicting where price is going to go, right? But when we see this come down here, let's say this is a 10-minute convergence or a 15-minute convergence if you're using fast. At the very least, it's going to be, it's going to be in the Bollinger Bands. It's going to be the clayway. We know that's a strong move. We know we haven't been to the 21 yet. And once we come out of there, we're starting to see some separation between the 13 and the 62. So, but once we get here, It's a good place to take profit or be looking for, for any significant amount of pullback, depending on what your money management is. We know we've got a high probability of coming back to the 62. So it's a 20 pip move, on either side of this. Yes, it's nice to get in here, but to know what's going on here makes a big difference. And once we rifle out of here, if we, here, like, again, I got kind of flat because of the time of day. Can't remember right offhand what happened after this. I think it's still kind of wandering. But if it's during London, New York crossover in the morning, and this 13 starts to pull down, and the 30 pulls down a lot slower, we're from here, we're going, back to the 21, potentially the 34, it could be the 55. So we're starting to get into that ladder of harmonic targets, if you will. Again, Steve does a really good job in his session, kind of explaining what the harmonic targets are, why they're important, how to use them. So as you move down, and let's say you get to the 55, you're going to see price come to the 55, may blow right through it, may bounce off of it. A lot of times it's going to consolidate around it. You're going to get some consolidation, might pull up to the 34 and then take off. Or it consolidates around it, pulls down a little bit to the 55, comes back, checks the 55 and takes off. And you'll see that on, whether it's 55, the 89, sometimes the 72. The main ones, you're going to see that a lot where price is going to come and kind of hover around it. Sometimes if you're doing wedge alerts, that'll be where your wedge is at, and then it breaks out from there. So any questions on that? So Spencer asks where to get the enable code to use this. If you go to this session in Scans, Forks, and Fibos, he gives out the enable code in that session. So watch the session. The reason we do that is so you understand what is actually being done by the indicator and what it's the information you're getting from it. So are those normal sweet spot trades? Yeah, yes, you will see this happen a lot. Of course, you can, like here we came up and, well, a good example, we crossed up right here, boom, 5, crossed to 13, 13 crossed. This one came right up to the 21, pulled back a little bit, went to the 21 again, came back to the 62. This is why you got to, like, oh, we made a 4-hour convergence here, so impulsivity's down. So once we made that convergence, yeah, we made it to the 62, but we need to be real careful about being like, oh, it's going to bounce off the 62 right here. That's where I said, being predictive, you got to be a little bit careful. You need to work it with waveology, where when it came down here, the 4 hours moving down. So when we come back, we're 4 hours still in the middle, 30 minutes getting pretty much extreme there. Higher probability of it going like that. But you will see this pattern a lot. Last week you said that. I'll cover that in just a little bit here, Henry. Question on how important the 5 EMA is. So the EMAs it's the moving average, right? It's the average of the last 5 candles. So in Steve's video, he explains how when the 5 crosses the 13 and the closer to the 62, the better, and the 13 crosses the 62, so it's kind of a 1-2 type of situation. We generally have a strong move in that direction. So it's You're setting up, this was the beginning of the run, and the 5 crossing the 13s like the beginning of the run. And then from there, you're looking for it to start opening up. The 5 will start getting a little further away from the 13. Again, this wasn't a strong move away from the cross. The higher time frames, like the 15-minute, 30-minute, you're going to get stronger moves, obviously, because the waves are longer. The 5-minute is a little bit trickier, but it is the same kind of data. It's telling you that run is setting up, that we've kind of turned over. Here we can see where the 5 is staying above the 13, price pulls back, but the 5 stays above the 13. And so, we're not looking for it to dive there until it crosses over. We're here once it crossed, and then it takes us across to 62. That's giving us data on what could potentially happen in the future. Good morning, Zoe. Got a question. I said something last week, and somebody's asking me a question on that. Let me pull up a chart here where I can I'm just looking for an example of it. All right, let's use this as an example. All right, wow, that's wiki trash. So in the U.S., we had our interest rates had been flat for a long time, and then with our economy doing well and growing, they started increasing interest rates. And today, they think for the first time in 10 years, they're going to decrease the bank interest rate, and so that's what's creating a lot of this. It's just indecision in the market. That decision's at noon Eastern today. So expect the market to create a big spike there and hopefully kind of even out after that. And then we have NFP on Friday. So not a great week to be trading, great week to be learning. Still see some of the same patterns, but obviously this here is pretty much untradeable. So the question I have is that I said if the local 5 and or the local 13 EMA pull inside the 62s, there's a possibility. Actually, the possibility price will hit the 15-minute 62 or the 30-minute 62. Okay. So to clarify, I'm on a 5-minute chart here, and I use a kind of a 5-minute chart as a screener to see what's going on. And I have this is the 30-minute 62, this is the 15, this is the 10, 62 EMAs for those time periods, that's the 5. The white is the 1-minute 62. The white also happens to be almost the exact same value as the 13 EMA for the 5-minute chart. So it'd be yellow if I was doing that. I keep it white because I use it as a 1-minute, and I don't confuse it with this either, especially when they're starting to turn over. What I see fairly consistently is you want, when you get so this here is essentially a 5-minute cross, right? It's crossing down. We expect price to move down. As price is pulling back, if the white gets inside the blue, so the 1-minute or the 13 EMA on local time period crosses over, generally I see the price is going to pull either to here or to here. Again, you don't want to predict. Your waves are going to tell you, hey, when this is a harmonic wave convergence starts to turn around, it's time to turn around. But if we look as it pulls out, here it stayed above, it didn't make that. Here it pulls down. Once I get in here, Now we're seeing it come back to the 15 again. So it's a stronger retrace. It's just, obviously price is showing it as well, right? The EMAs are only a reflection of price. What the EMAs are doing is really giving us an easier view with our eye what's happening, a visual on. In here, this is a pretty gradual, they're not opening up like we like them to see, where, it's more like, we're coming down the chart like that. But we can see that it's a slow trend. It's almost ranging, if you will. But that's what I meant by that. Hopefully that clears that up a little bit. John Nix, Clay used this the other day, the Fibonacci rainbow. That was the Fibonacci. I haven't used that. I believe so. It was referenced in the Scans, Forks, and Fibos group. I couldn't tell you if you change this to a 10-minute chart if it changes them automatically or not. Yes, Tim, there is a wedge there. I just don't know where in between the wicks. When price passes and checks 62 MA 30 minutes, you need to cross all of it. So the question, when price passes and checks the 62 on the 30 minutes, so let's say price comes up here, comes here, is going to take off. These are obviously going to start coming with it. When my EMAs are jumbled, I tread very lightly. I like them to be in order here. Again, let me pull back here a little bit, see if, but here's an example here where prices, I call this turning over, right? Where price is coming down. This is obviously on time period strong move here. We've got a little wedge, break, small wedges, 5 minute. But price, you're pulling over the 62 here. And right here we see how they're all jumbled up. Are there trades there? I mean, if we look at, that's going to be the Clay way. It's a strong move. 30-minute snake here. Time to be selling. But I would rather wait until we get to this point, which if we look is our 30-minute pass and check. It crossed. More than likely, I don't have the 13 on for the 30 right here, but price came down past the 30, checked it, and we can see our EMAs, our 62s are starting to work themselves out. We got a nice 10-minute convergence right there, 30-minute not an influence. It's actually a retrace, but this. As opposed to trading this, I would rather wait for this. And this is only a 3-hour, 4-hour time window there. Yeah, static extreme here. Henry points out divergence right here. I mean, this is a strong trade to me. It's like you're coming up, you're tagging the 62 again. So I talked about it a little bit last week. It's patience. It's getting rid of the FOMO and knowing what you're looking for. These sessions have been so good because it gives different views of different things. And your RAS is, depending on what vibration pattern you're on, you're going to gravitate towards one thing or the other. And it is it's a progression of learning, but to have the little bit different views of how it's interpreted, I think helps a lot. So I think we all benefit from that. Even as coaches, we watch some of the other coaches' sessions, time permitting, to see what their thought process are. Even though we're friends with them and and we, share information and ideas. When you see them on the charts, it's a little different angle. So, what's the best way to set up all of the different time frame EMAs? I would say the best way is to use the HT ATF on time period. Let's see. I'm not. So this is actually a 30-minute or my 5-minute screener. Let me pull chart in here. That's not what I want. Yeah, we'll use that. All right. So the question was, what's the best way to set up all the different time frame EMAs? So when I usually go 15.5.1, and then this I'll toggle it. I'll bump over to the 30 when I'm looking at the 30. So on each chart, I would put the HT ATF indicator on it, which will give you your local 5.13.62. So 15.5.1. And then on my 5, especially on my screener, I like to be able to see the other EMAs. So 5, 10, 15, and the 30. So I'll use the values needed, and we can go through that next time, or I'll make a video and post it. And there are different indicators as well. But on the 5-minute, I'll put the rainbow on there, if you will, so I can see a little bit more what's going on. On the 1 minute, I have them, but they're clicked off. And sometimes I'll run my 5 too, where I have the other one shut off. And if price goes past the 5, then I'll click the 10 on, click the 15 on. It's a little bit cleaner. It's a little bit easier on your RAS. But if price is retracing past the 5, I know that the 10 and the 15 are up there. So I'm not going to take a trade until the 5 is at least in static extreme. Yeah, this, that's price is retracing here. I like to let it go to extreme. It gives me a little more assurance that it's going to pop out of there. A lot of times the 10 minutes going to be with it as well. So, so does that answer your question, John? Yeah, once you get the EMA values, I just use the standard EMA indicator, and then so like on a 5-minute chart, get the pen out here. On a 5-minute chart, HT is going to be my local. And you're always working with 62, right? Because we want the 62. So on a 10-minute, it's 62. If I'm on a 5-minute chart, 62 times 2. So 124 EMA. 15 is going to be 62 times 3, 186. And then the 30 is times 6, 372. If you're a tab 29 trader, Steve does have a MA indicator for the people that are tab 29 that you should have access to. That's where I get my 30 from. So I put those on there, and then I can toggle them on and off, set the appropriate color, yellow, orange, blue. If you're on the 1 minute chart, I'm not looking at a 30 on that, or I'm using an indicator to do it, but your 10 minute on the 1 minute chart is going to be 620, because 62 times 10. Your 5 is going to be 310. And then your 930 for your 15 minute wait, or 15 minutes 62 on a 1 minute chart. On a 15, I usually just run the 15 and 30. Does that help a little bit? Suppose I could have waited with the erase there, but. Okay, good. All right, so there's one other thing on this chart that we didn't cover, and again, it's covered in the HTATF video, and it's the Fibo that's running there. If we notice, I pull the Fibo here. So price started here, it came down to here, and Steve notes that with a high degree of occurrence, price is going to pull back to the 62 right around the 38.2. Sometimes it'll go as far as the 0.50. But when this pulls down, he even goes as far as to say when price is pulling down, you can keep pulling this Fibo and let the 38 kind of set on the 62, and it'll give you an idea where this move is going to end, which is pretty powerful when you think about it. And then if we leave this here, when price pulled down here, it actually came back to that line. And if you'll notice, and again, it's not going to be this way every time, right? Whoops. If you notice, in this case, this line is also the cross, which was right here. So the 38.2, it pulled up just a little shy of it. So the 62 actually got in the way of the 38.2, if you will. A lot of times it'll be the same value. There's probably a 5 pip scale here, half a pip if that, in between there. But another good, and he does a really good explanation of it in real time. So something to check out. But just another, hey, pull down to here, where's it going to be? Where's the 62 and the 38.2? Where do they cross? So there's a good shot that price is going to come back to there. So the magic of Fibo. So the charts are all Fibonacci. It's funny because you can go back here and pull to here, and this is a 94.1 retrace or 88.6. Everywhere, if you go to come back here and go, whoops, I keep coming back to the dots. You're probably curious what the dots are, so I got a head game thing for you. You come back here, and this is a retrace value of over here. Everything on the charts is Fibonacci based. Any other questions on this chart here? Henry asks, is there an observation based on your experience that you have concerning interaction of EMAs or maybe even shredder bands with price? So shredder bands are, 30-minute shredder bands are one thing, mainly because we're trading a lot of 30-minute, you know, a lot of tab 29 and fast 33 were set up as a 30-minute system. They do obviously measure higher and lower time frames. So shredder bands on time period and the 30-minute shredder bands, there's price interaction with them. You know, Steve wouldn't have developed them if there wasn't. It's another potential support and resistance. This little, you know, shredder band 21 hit, and if price goes out to the 34, shredder band 34 or beyond, then comes back inside the shredder band 21 on a 30-minute chart, there's a high probability, 87%, that it's coming to the 62 eventually. Actually, I was looking at a case of it yesterday on one of the charts where it was the same value as when it was at the 34 because prices kind of meandered and they met each other. As far as EMAs, put them on your charts and work with them. You know, the power of the 62, and it probably didn't do as good a job as I could have last week and this week, is price is going to keep coming back to the 62. Yes, at times it pulls away a pretty good distance based on time period. But if we look here, it's like price hit the 62, comes down, goes back to the 62, goes up, comes back to the 62, goes through, comes back, goes down, comes back. In Steve's study of moves and different EMAs, whether it be an EMA 50, an EMA 21, 100, he saw on like 2.8 times to 1, almost 3 to 1, the 62 or .618 was the most magnetic EMA on the chart. So we basically consider it the middle of the road, if you will. The price is gonna move along, but you know, when it's almost like driving, and when you want to get your car centered again, that stripe's in the middle, the stripe's in the middle. You always want to have that stripe in the middle. So as you put them on different time periods, what you're going to see is price is going to make a strong move, impulsive move, and then a lot of times your retrace is going to be back towards an EMA. It, you know, may make the EMA of that time period. It may be a different time period, but eventually it's going back to that time period EMA. You know, the pound was out at it was 130 pips from the 62 the other day. And what we have to remember is this is an average, right? So as time goes on, price may not come back that much towards it, but the 62 is also moving towards it because it's averaging it. So that, you know, some of the gravity is not that, hey, it's staying here, and if price, you know, runs way away, it's coming all the way back to it. At some point, they're kind of meeting in the middle as well. So hope that answers your question there. Not sure exactly what your question was there, John. So the question is, so do you look for a 13 EMA Clayway when the higher time frame EMA spread? Is that the correct idea? Yeah, more so, Zach, I think we're using the EMAs just kind of as a guide. Number one, on time period, price wants to go back to it, but more so as a guide to show us, you know, what is price doing. You know, as they're opening up, we know that trend is stronger and stronger. You know, here we can kind of see, you know, the 13s moving away from the 60 here as price moves up. So we know as it gets here, you know, this is a strong move. When it pulls back here, look at how far this separation is. You know, so we're looking at this here, you know, 4 hours moving up, 30-minute it pulled back. On a 5-minute chart, 5 minutes going to be down here at extreme and more than likely on this area right here. And we know because the separation between the 13 and the 30 that there's still, upward movement. We don't know that for a fact, but it's given us a good indication, put it that way. When price passes the 62, then turns around there, look for some. Pat, are you saying when price passes and turns around and then comes back and hits? So like this pass and check right here, is that what you're referring to? So here, in this case, the 62 is your support and resistance. And we had the 38.2 right there, and we had the cross, the 1362 cross. So within a pip, you've got 3 S and R lines right there. Oh, so you're saying like here where it went and then turned around? Okay. So he was asking if price comes down and pulls past. So if you're running shredder bands, a lot of times there's a 5 here, there's an 8 here, shredder band. Sometimes price will pull up to the 5 or the 8 and then reverse out. Where it's not always going to be a perfect tag there, right? And yeah, of course, in that case, we're looking for some type of support and resistance. In this case, we had our 38.2 here. We can cycle through our INS on that. We might have there might be a trend line that's going to pick it up, pitchfork. Whenever we're looking to trade, we're looking to have, minimum one support and resistance, ideally an energy point. So in this case, 30 minutes getting towards extreme, 10 minutes going to be extreme. We're just trying to figure out where that turnaround point is. Question. So 62 is middle of the road, whatever time period you're on. So if you're on a 5-minute chart, price is going to pull away from the 5-minute 62. It's going to come back to it. You're going to, when you see a cross on a 5-minute chart, before too long, it's going to come back. It's going to check that 5-minute more often than not and take off. Sometimes it comes back, goes through it, but that's where you're watching. If you want the 13 to be spread now, it comes back and checks it, and that's a strong move. All right, let's move on here because I want to wrap this up in an hour. I've got this. I was talking to Clay the other day, and I can't remember what we were talking about. And we were talking about, I can't remember how we got started on it, but your journey. And Steve talks about, let's see. After demoing a lot to learn what not to do, how do you determine, and that's why you demo, how do you determine that you're confident enough to start trading with your live account? I would say once you are confident you're doing one thing, you're demoing one specific type of trade, is to do 50 demo trades. So start another demo account clean, do 50 demo trades, journal all 50 demo trades, and see what you should know what your results are. But you want to get to, Steve says it in the video on the brain. I can't remember her. Zoe helped me on that one. The brain physiology video is that you want to get to a point where you're trading subconsciously. Trader's physiology. Thank you. It's in the files tab of scans, forks, and fibos. But you want to get to where you're trading subconsciously. So you know what the results are. You know when you take the trade that 83% of the time X is going to happen, 17% of the time Y is going to happen. And the 17 we can't control, but we know that, per trade or over a volume of trades, you're going to be positive, and you're not, at no point before you're trading live should you be hoping, wishing, praying. When you enter a trade what the result is going to be on a volume of trades. So I hope that helps. Yeah, and Zoe makes another good point is when you're able to teach somebody else that one thing that you're trading, is that you can go and teach it to somebody else well enough that they could teach it as well. So I think with that, we'll wrap up. We're a couple minutes past the hour. We're trying to keep these to an hour just to make it easy on you guys. Thanks again for coming. Really appreciate it. And we've got the session later today with Clay going over waveology. And we've got Zoe's been doing a great job of keeping the history and the archive up as well. So she has yesterday's archive up as well. So have a good day and enjoy your day. Thank you. Bye.